Good morning. It's Thursday, February 20th, about 6 a.m. Central Time, opening day for spring training, where we've got the Cubs taking on the Dodgers, and the Dodgers are going to put it to them. If you don't know, I am a big White Sox fan. We've got the front cover of the Sports Illustrated right there when they did win the World Series way back in 2005. So looking at these markets here overnight, we do got a new record high in the gold market. I was calling for that yesterday, but the issue that you have is when you get into these choppy kind of trading, consolidating sideways ranges, you get a lot of people that are going to play that back and forth action, trading the channel here, and then a lot of people were waiting for those Fed minutes to come out. So let's get into it here. I'm Philip Streible, Chief Market Strategist at Blue Line Futures, and let's get you ready for the trading day. Take a look at the precious metals, the futures, the commodity markets. So looking at the precious metals overnight, you do have gold reaching a new all-time high, jumping about 1%, and silver tacking on about 2%. Some of the overnight ranges that I'm watching here in key levels. Now remember, register for a free 2-week trial of the Metals Edge, and you'll get updated levels there as far as key levels for adding and taking positions off. Something else, my partner Bill Baruch, he runs Blue Line Capital here for your wealth management solutions. He's going to be talking about some of our portfolio picks, some of the recent moves in our wealth management side. Now getting into that'll be on CNBC, and it is going to be the halftime show. So that's 11 a.m. Central Time, 12 Eastern here. So looking at April gold, the last trade here, pulling back off reaching those all-time highs overnight, trading 29.6450 last. The high in the overnight session, 29.7340. That is your record high on the April gold futures contracts. A lot of the clients that have been working with me, they have been selling some of those positions, and one of the benefits again of having a futures trading account is they were selling those positions last night. They had resting GTC sells, and they kicked out a lot of those positions there. The low in the overnight session is going to be 29.4110. So your pocket support, and I outlined this before, it was pocket resistance 29.50 to 56. Now it's going to be that 56 down to those lows here is going to be your pocket support for intraday trading. Now March silver, your high 33.78.5, the low 33.08.5, about a dime away from where we're working a lot of sells on those March silver contracts. And the reason is we want to try and time the roll. We want to sell some of these rips here and attempt to buy some of these dips in the market and look to add on to the May contract here. We want to stay with these front months here because an observation I had a couple days ago when we saw markets kind of squeezing higher, you saw the front month, it was outperforming some of these back months where silver, for instance, at one point was up about 30 cents on the March, 26 cents on the May. You got to July, it was about 22 cents. And that's where you get really this backwardization, and you get things where that physical squeeze is coming into play. Now, if you go on the gold silver ratio, last Thursday, 90 to 1, Friday's big explosive move in silver took it to 86 to 1. Monday, Tuesday, and Wednesday, right around 88 to 1, and now we're getting down to about 87 to 1. So yesterday's big headlines here, and I think that this is what the market was waiting for, because this is when we saw the turn in a lot of markets. And if you were trying to trade the equity markets, very tight trading range throughout the day. Gold futures, not a lot of movement here, more liquidation than anything. Same thing with the silver market, dipping down to those critical support levels that we talked about. Overnight low, 33.08.5. Where was our pocket support we've been talking about? Right around that level, down to about $33. So we did have the Fed minutes. They came out yesterday, and it was confirmed that the Fed is on hold, but they are leaning towards lowering those Fed funds rates at some time in the future if inflation falls closer to 2%. It's a dovish pause, in my opinion, here that supported stocks, bonds. It lifted those metals off the intraday lows. Now, the inflation outlook, the Fed is really kind of concerned, and it really wants to wait and see what Trump's trade and the immigration policies, if they're going to increase that inflation or not. Now, on the other hand, they did say that the higher January inflation data should come lower in the coming months here. So we're going to want to keep an eye on that. So looking at some of the overnight action, you do have U.S. equities. They are in the red right now, 61.48 as of this recording in the S&P 500, down about 15 points here. The NASDAQ down about 53. The small caps here down about 6 at 22.83. So U.S. equities, they are retreating from the record highs, and the concerns are still, again, with the tariffs. You look at market jitters, they're kind of fueled by U.S. President Donald Trump's threat to extend those tariff plans and his apparent withdrawal for Ukraine here from some of the obviously from that conflict that's been going on over here. And it's got some market jitters here with the European allies. They're thinking that if they pull out, that things are going to broaden and the war is going to escalate. But I think that that's a lot of rhetoric here. But that's just my opinion and my opinion only. So getting back to it here, sticking to the focus. Recent gold headlines, couple things that I've been watching. And you guys really want to know that Goldman Sachs this week, they did raise that year-end target, $3,100 an ounce. They're saying stronger than expected central bank buying is really going to be the key driver for prices. So a lot of people talking about geopolitical risks and things like that, I think they're just missing the boat. They're focusing on an old story, not a new one. So this is a story that I really found interesting last night, and I was reading, and I really want to share it because it'll trigger people, and it really triggered me. So the story was that the S&P 500, it easily beats gold, silver as an inflation hedge. And it talks about the relentless rally in gold and silver and stocks and picking a winner to beat inflation over time. It looks like a tough choice, but the obvious one and the true winner on a hedge against inflation is stocks. And what they do is they say that the S&P 500 produced a nominal compounded annual return of 8% since the end of 1950. And they compare that, they take that from 1950 to 2024, that the S&P 500, 8% return, and it compares to 6% around gold, 5% around silver. And they say it's even more interesting if you adjust it for returns. Well, guess what? The gold standard didn't end until 1971, so you have this suppressed price. So you're just faking this whole thing out. It's just a bunch of complete garbage here. They're going to write it. They're going to backdate days and in whatever narrative it fits. So obviously this is something to put on to most likely pump, an SPY type of ETF or things like that. And they're just trying to beat up gold and silver because gold, frankly, has been stealing all the headlines over the last 2 years and stringing together a couple good years and off to another good start here. So looking at the ETF buys here that happened in the last trading session here, we saw exchange traded funds. They added about 133 ounces of gold in the last trading session, brings those ETF buys to about 1 million ounces, and that was a third straight day of growth. So we did have some liquidation go on here in these markets. Once you get near these highs and you get these parabolic moves and things like that, people are going to be worried that they're buying the top or they don't want to get trapped in too large of a position. Because remember, when you buy things like on our wealth management side, we must have trimmed NVIDIA 1,000 times as it was going up because of the fact that it gets too big of a position in the portfolio here and you got to trim it back. So I'm sure that on the exchange traded funds, that kind of happened as we were coming up to that first record high. So silver futures starting to get some love here, stringing together 8 straight days of growth as far as ETFs added another 333 ounces of silver in the last trading session, bringing this year's net sales to 12.4 million ounces. So this is the longest winning streak. So 8 straight days of people piling into those ETFs since May 27th of 2021. So some key events and some things that I'm going to be looking at here. Obviously checking out Bitcoin, seeing if it is turning out a bottom here or if this is just another rollover and we're going back down to 75,000. I'm also monitoring some of the agricultural products here with corn about $1 off of the recent contract lows, thinking that might be some kind of sign of a pullback, might be ahead of ourselves here. And then starting to look at those energy markets. We're starting to see crude oil kind of creep up a bit here, trying to break its way out of a downward channel because OPEC looking to kick the can down the road as far as those supply builds and things like that. So some key events this week, we're going to be looking at European consumer confidence today, initial claims, Philly Fed manufacturing, and then we're also going to have one of the Fed speakers, actually 2 of the Fed speakers coming out here. I'll be paying attention to Goolsbee, and then we're going to have some Eurozone data tomorrow, and then some PMI data, new existing home sales, consumer sentiment. So a lot coming out here in the next 2 days as far as data, and it seems like that's kind of a reoccurring theme where we're just back-ended here, but everything looks hunky-dory here in the metals markets this morning. So we'll see what happens here, if we can hold on to these gains or if the sellers are going to come in the morning session here. But keep an eye on the dollar index, keep an eye on US equities, keep an eye on copper and platinum, see if platinum could recapture that $1,000 mark after a brutal 3-day sell-off in that market. You got any questions, be sure to reach out to Blue bluelionfutures.com. And also, if you got any questions, you can send an email to info@bluelionfutures.com. Be sure to register for the Metals Edge, and be sure to check out my partner Bill Baruch on CNBC here later on today, talking about wealth management solutions and different stocks that we're adding. He's on for the full hour block, so there's no reason why you shouldn't miss him. And then remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.